you have to define what game you want to play before you start playing the game.
Okay.
This is why I think it's kind of nonsensical. For example, I believe that at best, I am an equity investor in technology companies or things that have a technology bias because I can generally understand them maybe, a few seconds faster than everybody else, which allows me to make a decision a little bit quicker. But if all of a sudden I started investing in debt, you should expect that I'll lose my money because I don't know what I'm doing. And that's not the game where I have any advantage. So I think the most important thing to do is to not try to do all of this crazy stuff because this is what happens in moments where either things are very, very good or things are very, very bad. People try to create all these stupid rules. And their only rule is there are no rules. So I don't know. I just think it's like stick to your knitting. If you're a product builder, build products. If you're an early stage investor, just do that. It's hard enough to do any one of those things really, really, really well. But this idea that, you're going to come up with like some mosaic in a system, I think it's just highly suspect. And I think the market returns have showed that everybody that tries has failed except for maybe one or two.
Sachs, any thoughts?
It's just not going to work. What's the point? So I don't know. If you're an early stage investor, make good deals and then give the shares and book the win.
Hello and welcome to Money Talks. In today's video, SPAC sponsor, venture capitalist, and founder of Social Capital, Chamath Palihapitiya, shares his updated outlook on the U.S. macroeconomic picture, the key reasons behind why SoftBank experiment failed, along with the key metrics that signify a bubble or the top of a market. Make sure to stick around till the end of this video where Chamath talks about Fed policies, market conditions, recession, and his thoughts on Donald Trump and the FBI raid. So without wasting any time, let's dive right into the video.
I think David basically said it best. Like, if you actually just take a step back and stop overlaying what we want to happen. Look, the reality is all four of us want things to go up. And we like it when there's money in the system and everything's flush. But if we had said last year that we would open an envelope and, we would show these inflation prints, we would be shocked and we would have been scared. And quite honestly, in the process in November, when I started selling, I would have sold even more violently than I sold. And all I can say is I saved my ass in November of last year, looking at what's happened in the last 6-8 months. So I don't know. I just think that if you look at the CPI print, and you look at the components, we were saved because energy basically fell off a cliff. And for whatever reason, a bunch of people decided not to travel and, we didn't import as much oil and we were able to keep costs contained. And that kept CPI from being really out of control. But again, we're in the summer where we don't have the pressure on energy that we're going to have in October, November this year. So I really don't know. I mean, I just think that there is like Freeberg has his pet issue. I have my pet issue. Sachs has his pet issue. You ask 100 economists, they'll have their own pet issue, housing affordability, whatever it is. The point is we have 100 whack-a-mole problems. And the question is which mousetrap sets off the rest of the mousetraps? I have no idea. And so, I just think that right now, things are a little bit too calm, and that makes me feel very unsettled.
Federal Reserve officials at their July meeting indicated that they likely would not consider pulling back on interest rate hikes until inflation came down substantially, according to minutes from the session. During a meeting in which the central bank approved a 0.75 percentage point rate hike, policymakers expressed resolve to bring down inflation that is running well above the Fed's desired 2% level. They did not provide specific guidance for future increases and said they would be watching data closely before making that decision. Market pricing is for a half-point rate hike at the September meeting, though that remains a close call. Meeting participants noted that the 2.25% to 2.5% range for the federal funds rate was around the neutral level that is neither supportive nor restrictive on activity. Some officials said a restrictive stance likely will be appropriate, indicating more rate hikes to come.
I mean, I think that people don't seem to understand that if you're going to attempt to be great, there are going to be moments where you look the exact opposite of great. You know, the guy that takes the final shot is the same guy that can miss the final shot. And here is a guy over his, 50-year career has had some huge ups and downs. This is also the same guy that found a way to rip in 25 or $30 million and made 125 billion off of Alibaba. That's the same kind of person who has that kind of risk tolerance. He was, for 7 minutes or something, the richest person in the world.
Yep.
And then lost 99% of his wealth in the dot-com bubble. I have enormous respect for a person like this because I feel like it takes enormous amounts of courage. I've said this before. Most people jibber jabber about investing and all of this stuff. And when push comes to shove, they crumble like little bitches and run into mommy's coattails. It's hard to put lots of money to work. And this is a guy that's done it. So the same person that can make 125 billion turns out is the same person that can lose 30 billion. And so one thing is, I would just keep in mind that this is a resilient guy who seems to land on his feet. And the second thing that nobody talks about is how smart Saudi Arabia and Abu Dhabi were in how they structured the investment into the Vision Fund, because more than half their investment is in preferred equity, which is effectively debt that pays a coupon. And you see it now where SoftBank, by the way, who has been pretty smart in how they've managed their Alibaba position, have been using these derivatives and forward swaps to be able to sell and manage their liquidity. So it turns out that, even if the Vision Fund breaks even, Saudi Arabia and Abu Dhabi will have made money because I think they paid a 6% coupon on, $50 billion is a lot of money over 6, 7, 8, 9 years. It's a lot. SoftBank has found a way to sell down 25% of Alibaba, which is no trivial feat for a $500 billion company. And this guy gets to keep swinging. And if he, hits it one more time, he'll end up with $500 billion.
Officials noted that future rate decisions would be based on incoming data, but they also said there were few signs that inflation was abating, and the minutes repeatedly stressed the Fed's resolve to bring down inflation. They further noted that it likely would take some time before policy kicked in enough to have a meaningful impact. The Consumer Price Index was flat for July, but was up 8.5% from a year ago. A separate measure the Fed follows, the Personal Consumption Expenditures Price Index, rose 1% in June and was up 6.8% year over year. Policymakers worried that any signs of wavering from the Fed would make the situation worse. Though the Fed took the unprecedented steps of hiking 0.75 of a point at successive meetings, markets have been in rally mode lately on hopes that the central bank might soften the pace of increases heading into the fall. Since the recent bottom in mid-June, the Dow Jones Industrial Average is up more than 14%. The minutes noted that some members worried the Fed could overdo it with rate hikes, underscoring the importance of not being tied to forward guidance on moves instead of following the data.
SoftBank, in hindsight, made one critical error and only one. And everything else was sort of a fait accompli with that one error, which is that in their fund documents, they made this a 10-year fund. Now, let me explain. Why is that an error? That is the status quo for all these funds. And the more nuanced part of that decision to make it a 10-year fund is that your investment period is only 5 years. So you're only allowed to put the money in for the first 5. And then you have to basically manage the portfolio because there's an expectation that you raise a new fund. So if all of a sudden you have $100 billion in a 5-year investing life, the math says, oh my gosh, okay, well, I need to put 20 billion out per year. And then you try to look for, let's say 50 companies a year. Well, the mean check size now all of a sudden balloons to 400 million. That was the error. You see afterwards, the very, very smart private equity folks who saw that that was the error fixed it. So Blackstone, Silver Lake, when they came on the heels of SoftBank, what they did was they raised funds with a 15 and 20-year life. And what that allows them to do, and what it would have allowed Masa to do in this situation, was just slow it way, way down.
Pace yourself.
And do fewer deals with much more capital, and then be patient and say, I'm going to have a 10-year investing life. And I think that would have saved them. And they would have looked incredible right now because they would be the kingmaker in a moment where there is no money flowing into venture and early stage tech. So in my opinion, I think it was just that it was such an ambitious feat that when it came time to execute, whoever was really in charge of those details kind of fucked it up. And they should have realized the math didn't work for a 5-year fund life. And they should have made it a 10-year fund life or 10-year investment life, which would have put a 20-year fund life on the thing. And I think they would have been fine.
Looking ahead to the Fed's September 20 to 21 meeting, it's unclear whether there will be a third consecutive 0.75 percentage point rate hike. Members concurred that the rapid move from near zero rates earlier this year to what they consider a neutral stance had helped bolster the FOMC's credibility with regard to bringing inflation back to the 2% target and contributed to a broader tightening of financial conditions. And while they expect to raise rates into restrictive territory in the near term, the minutes said that many participants remarked that, in view of the constantly changing nature of the economic environment and the existence of long and variable lags in monetary policy's effect on the economy, there was also a risk that the committee could tighten the stance of policy by more than necessary to restore price stability.
So whatever the outcome is, will not be good. Nobody will be satisfied. And both of the extremes in the United States will be even more angry.
Further inflamed, yeah.
Further inflamed.
Well, that's what I'm saying.
The inflammatory index has now skyrocketed, yeah.
By the way, this is why I think at some level, maybe the lack of faith in these institutions is well-deserved, because where is the prudence of all of this? Like, where is the circumspect, thoughtful, methodical thinking about all of the different outcomes that could be possible so that you exhaust every option and this is the only option left? And then even then, if Merrick Garland was open to basically saying, unseal the warrant, why didn't you do it before and say, we're going to have to serve this guy unless he actually gives us these things? There's all kinds of things you could have done.
Oh, clearly they did
hold on a second, to keep the temperature of this thing way, way down.
Yeah.
When people are so inflamed with emotion, they start to make very poor decisions. I don't know whether the DOJ and Main Justice made a poor decision or not. I think this is where we have to hold our breath and hope they didn't. I don't know whether the White House knew anything or not. But the whole point of all of this is that we pulled this guy right back in to the main stage.
So, do you think we're in a market bubble or the top of a market? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.